Good morning. This is Chris Robinson, Robinson Ag Marketing, with today's pre-opening grain and livestock comments for Friday, the first Friday of the month. We're going to cover the grains real quick, then get to the unemployment report. So this may be a little bit longer, so buckle up. March beans overnight up 5, traded back up to 1069. There's some resistance there at 1070, 1072. Can we get through that? Sure would be nice to get a recovery. Remember, we've been whipping all over the place in beans. Beans back in November traded as high as 1172. Then we broke all the way down to 1038. So we're here at 1066. Why is 1066 so important? It's the 200-day moving average. It's kind of the fighting zone. We're in the middle of all this congestion. Monday, we've got the USDA report. We know the funds are long beans. Will they stay long beans? They're not going to stay long beans if it's a bad report. So get your risk on paper there. New crop beans, same thing. We're trading at 1078. A good recovery. But just a few days ago, we were worried about going to sub 1050. We traded as low as 1055. So a bit of a bounce there. Are we going to get back north of $11? We did top out at around 1130 back in November. That was a tremendous rally. That was a great gift to producers, an 18-month high. Hopefully you did something. If we get back up there to $11, 11.25, do you have a plan for what you're going to do? If you don't, give me a call. I might have some suggestions for you. So that's what we're looking at. We know the funds are long beans, they're flat corn, they're short wheat, right? So they aren't really going to be a factor in this report. What's going to come out is, if the USDA comes up with crazy yields or extra production nobody saw, I mean, that's the risk that we have on Monday. So make no mistakes about it. There's 12 USDA reports every year, right? This is probably the biggest one. This one and then the acres report. So if you never hedge at all during the rest of the year, this is probably a report where you'd want to have something on. Some guys don't want to hedge. I mean, hedge is basically price insurance. I get it. And the last thing you want to do when prices are tight and inputs are expensive is spend money on protection that you might not need. So I'm well aware of what your decision-making process is. However, you don't have to spend a lot of money to get some protection here for the next couple weeks. With these weekly options now, you can do stuff. I'm doing stuff in corn for 4 or 5 cents for guys. In the beans, you can do decent stuff for 7, 8, 9 cents. And that may be something you want to look at, because you never need the insurance until the market moves against you, right? Then you're glad you had it. So the idea is to keep it as cheap as possible. You are a farmer, so you are a bet long. You are always long. You're always a bull. So you're like a one-armed trader. All you can do is fill out the blue side of the card, the buy side. The red side you can never get to. So that's what we use the hedges for, to manage the risk when we get these good rallies. All right. If you're interested, give me a call, 312-638-8868. So March corn, again, kind of a quiet range overnight, up down 3/4 cent at 445. We're sitting right there at the 200-day moving average. March beans at 1066, same thing. We're sitting right there at the 200-day moving average. When there's no news in the market to trade, there's no fundamental news, right? China's not talking. China was out of the market yesterday. We fall back to these technicals, and I get it. Most guys hate technicals. I've been doing this for 30 years. I look at technicals every day, and trust me, I hate them. But they are very, very important to price discovery, and you can just accept that's the way it is, or you can ignore it. In my opinion, you need to accept it and use it for what it is. They help give you areas where you have to make a decision. At the end of the day, there's no perfect system. You always have to make a decision. You always have to bite the bullet and say, yes, I'm going to sell here, or no, I'm not going to sell here. Every day you have to make a decision. These technicals can just help you make it a more informed decision, right? In the wheat, down a penny overnight, 517 in March, Chicago. We're going to wait and see. Can 501 hold? That's that contract low. Exports for corn and wheat have been great, and why not? Corn's been in a 30-cent trading range for 18 months. The guys are scarfing it up all over the place. It's been a great, great thing to have really good exports, but it hasn't moved the needle on prices in corn. If you look at wheat, yeah, we've had tremendous exports, but guess what? We're at 5-year lows. So again, sometimes you get really good news and the market doesn't reward you. So in the meantime, if you're storing wheat, same idea goes. You don't want to be in a situation where 2 months from now, March wheat has got a 4 handle, and you're like, oh, I could have done something at 5, but I didn't. And again, nobody knows where we're going to go. That's why we hedge. Anybody that tells you that they know where they're going to go, ask them, will they cut you a check if their information is wrong? That usually ends the conversation pretty quickly. So we've got Monday's USDA report to get after. In the protein complex, we kind of had a turnaround Thursday yesterday, right? It looked like we were about to roll over, and then we went and took a bid into the end of the day. These Friday settlements are very, very important. The cash market continues to be strong. Guys are out there telling me that, the cash market still, got a good bid to it. Guys are still out there buying these expensive cows. And it looks like that the robots want to go get. There's a couple more gaps way above in fat cattle and feeder cattle. Gaps on the chart. If you don't know what I'm talking about, get my letter. It's this technical stuff. But again, when there's nothing else out there to do, lots of times these computers will run towards these technical areas. That may be what we're setting ourselves up for in the cattle. But anyway, you cut it. We're at 10-week highs in cattle, right? Tremendous recovery. $30 bounce in the fat cattle, a $66 bounce in the feeder cattle, a $10 bounce in the hogs. Hogs look like they're going to go re-challenge the contract highs up there at 94 in April. So a nice bull market in the protein complex. If you're a producer, you want to hedge. I would say, try and protect yourself because you don't want to be in a situation like where we were 2 months ago when we're collapsing and everybody's like, well, where's the low? Where's the low? So when you get these good rallies, try and defend them as best as you can. And remember, you do not have to spend a whole lot of money. There are strategies out there that fit everybody's budget. And real quick with the outside markets, stock market up 100, S&P up 20. We did kind of have a miss in the unemployment number. That's the first Friday of every month. The Bureau of Labor Statistics releases the unemployment number. It came out. We were looking for 66,000 new jobs. They got 50,000 jobs. That was enough to convince the experts out there that that'll take the pressure off of the Fed to continue to cut rates. So that's the takeaway from this report. The unemployment rate did drop from 4.6 to 4.5. So again, everybody out there that has a political bone in their body, they're going to be trying to spin this any way they want it. At the end of the day, I try and ignore the politicians and watch the market. The stock market is shaking it off. Again, we're sitting at all-time highs in the stock market. And, the takeaway from this is that rate cuts are probably going to be shelved here for a while, especially as long as the current Fed chairman stays in place. Once his chairmanship is over, things could get different. But I think for now, with the revisions that they had too, we had some kind of negative revisions from November and October. They were revised down. November, they had said we'd had 56,000 new jobs. They revised it down from 65 to 56. In October, they revised it down. So that's going to be something that people are going to be arguing about. At the end of the day, what matters to us, right? It matters what the market's telling us. And that's my take. We have one more business day till the USDA report. If you're a farmer or producer, get your risk on paper. It's one thing to have an opinion. It's another thing to have an opinion that cuts out your Achilles heel. All right. Have a great rest of the day.